another 10 days for purposes of this test. And then you would add up the total amount of days between the 3 years to see if you meet this substantial presence test. And Radha will now go over certain exemptions from this test that may apply to you.
Right. So as Kyle was mentioning, all of that applies, if you're just if you're a non-student or non-trainee. But if you are a student and you're here in the U.S., let's say on an F visa, basically you can exempt the days that Kyle was talking about under substantial presence test for up to 5 years. So that's the first thing that's being listed there, 5 calendar years, right? It can go a little longer as long as you can prove that you don't intend to permanently reside here in the U.S. Okay? Now, if you're here as a teacher or a trainee and holding either the J or the Q visa, then you can, as long as you haven't claimed, your position as a teacher or a trainee for 2 out of the last 6 years, you can continue to exempt your days under the substantial presence test. But when you're looking at the 2 out of the 6 years, please take into consideration any of those years that you actually spent here as a student. Now, typically, none of the other visa classifications are exempt. So we're purely looking at the F visa, J, and Q. And the way you do this, so that you don't have to file a return, is basically filing the 8843 form. So all these forms are actually available online. So if you just, simple way of doing it, go to Google or even the IRS website and type in 2016 form 8843, you're going to come across this form. Sorry, yep, you have a question?
Yes, just to confirm, G4 visa is included here or not for those who work at international organizations?
G4 visa is not part of this. I think you may have to look at the details behind that. So this is purely looking at the F visa, J, and Q.
Where would you recommend it to?
So if you go onto the IRS website and type in taxation for G visas, it should give you details on that. We're not going to be covering every visa here. These are the main ones that we usually see that are being exempted under this code. Okay? So if you had income but that you had to report from U.S. sources, then you would file the 8843 form along with the form 1040 NR if you're filing as a non-resident.
So although your days are exempt from the substantial presence test, you're still filing the 1040 NR return and potentially reporting your income. So this just allows you to be treated as a non-resident. It doesn't mean that your income is not necessarily taxable.
Right. Because if you didn't exempt your days, then you would be potentially considered as a resident, right? And then you would be taxed on the worldwide income that Kyle was mentioning. Now, so this is all from a federal perspective. From state perspective, every state has their own rules. We're listing the 3 states that we are surrounded by here. And these are some of the general rules, right? So for DC, if you've been here at least 183 days or so in the calendar year, then you'll typically be looking to file a DC tax return. It may be a part year for that year. Yep.
Is that 183 continuous days?
It's 183 days in total for the calendar year. Yep. For Virginia, it's the same rule, 183 days. For Maryland, if you're here for more than 6 months during the year, then you have to file a Maryland return as well. So there are different rules for each of the states. So, the state websites have all the forms and publications as well, so you can always go up to their website to have a look at all the details.
Could I ask on Maryland, is that 6 months of this calendar year, or could it be 3 months of last year and 3 months of this year?
You're looking at this particular year when you file, because every year you have to look at the details. You have to look at your days. Every year has a specific filing requirements. So for example, we're looking at the 2016 tax filing right now. So you look at your 2016, what happened in 2016 tax year, to make a determination whether you have a filing requirement.
So this is the 2016 calendar year?
Yes.
Yes, so, and with a lot of the states, if you move into the state during the year, you become a part-year resident,
Right.
depending on when you moved in. So if you moved in, say, November, although you didn't spend the full year in the state or meet the 6 months, you would most likely be considered, if you're going to continue living in the state the entire next year, you would be considered a resident from the point you moved in until the end of that year.
Unless you know for a fact that you're not going to be in that state for long. Like, for example, if you know, fine, you moved into the state in November, but you know you're going to be out of the state by, say, January, February, then you're not really in that state for very long.
When you talk about the year,
Yes.
you're not counting anything in 2017, right? This is all.
This is all for
the current
current
year is
yes.
2016,
Yeah.
not any days in 2017.
Right. Yep.
What if I lived 6 months in DC and then the last 3 months in Virginia?
So there is reciprocity agreements, so that's what that's being listed there.
But if he's moving,
So
what does
you're
that mean?
physically moving.
So I have to file taxes, do I file DC taxes or do I file Virginia?
if you earned income while living in both states, so for the first 6 months you were here, you were living in DC and working.
I didn't work.
Oh,
It was
so-
just a summer internship that I did in New York.
So if you do not
I
have,
came back, I lived in Virginia after.
so if you didn't have income while living in those states, then you should not need to file a return.
Okay.
So only the federal 8843 you'll have to file when you have no income. But if you have no income, the states don't make you file a tax return separately.
And what if you do?
If you do, you would have to file that state tax return, depending on how much income you
Right.
earn during the year. And each state has different limits of thresholds for how much income requires you to file that state tax return.
Yep.
Does the scholarship count as an income?
Sorry, what was that?
Scholarship. Funds that you get-
Scholarships?
Yeah, because I got a deduction of my scholarship. And I was wondering if that counts as well.
It's going to depend on whether it's a taxable scholarship or not. It's going to depend on what you use those funds for.
Need to pay the tuition.
So scholarships for tuition and fees and books normally for students are non-taxable items.
It's usually exempt.
I got a deduction
Okay,
out of it. Maybe we can discuss it later offline.
right. I mean, and-
That I can claim it.
Okay, we can look into it
Yeah, we
after.
can look into it.
We'll take questions afterwards.
Right. So the one there?
Yes, does that mean we're gonna have to file taxes separately for 2016 and 2017?
So every year, you have to make an assessment
Okay.
as to whether you need to file a tax
Say
return or
the
not.
3 first months of 2017, am I gonna have to wait till the end of the tax year of 2017 to file for it?
Yes.
Right.
So the US tax year runs from January 1st to December 31st. And usually the tax returns are due by April 15th, following the end of the calendar year. So every year you make an assessment as to whether you need to file a tax return or not. Yep,
Yeah, as a PhD student, we get a stipend and also that covers the health insurance. Can we somehow make it, can we get the health insurance back, like the money?
you're talking about you paid into health insurance, or like, are you talking about Medicare payment?
United Care.
It's health insurance.
Health insurance?
So I wouldn't think that you would be able to get your health insurance back normally. That may be something to ask the employer if they shouldn't have been withholding it, but not through your tax return, you wouldn't be
Right.
getting that back.
Yep,
So I moved from New York in September.
okay.
What I like filed for both taxes when in New York and DC.
Were you working in New York?
Now,
Okay, if you're not working in New York, if there's no income from New York, you wouldn't have a New York filing.
what if I'm not a DC resident? Technically, I mean, because I still have my address back.
Okay, but what's your intention of being in DC? Like, are you going to be here for the next several years? Are you going to be working here?
I'm gonna move back after college.
So you would have to look into the residency rules. So
Right.
for DC, if you are actually qualified as a non-resident, there are no DC taxes. But you would have to look into your situation in a little more detail to see if you do meet the rules or not for DC.
I mean, at the end of the day, if there's no income that you're earning while you're here, you don't have to file a state tax return. Each state also has thresholds based on what income you're making. If you typically exceed that threshold, then you would have to start filing a tax return. So if there's no income and you're just physically just living here, then there's no filing for a
I
state
mean, I
tax.
work.
You're working, okay. So you may have to look at the DC rules, because it all depends on the income as well. How long you plan on being here, what your income is, things like that. Yep, yep,
Just one more question. Is that the same with federal? So if I have a J2 dependents,
Uh-huh.
not earning income,
right.
I would obviously submit a tax return, but does my dependent need to submit a tax return as well, or no?
She's on the J visa as well.
She's a J visa, a dependent visa, but not working.
She probably would, well, she a student, what is she?
which is a full-time parent. She's working much harder than I am. But
So they wouldn't require a Form 1040. They may require the Form 8843 that we're going to go into, which is just an informational form. But if they don't have income, they wouldn't need to file a tax return.
great, thanks.
Okay?
And one more point on reciprocity. So if you, within the states of Maryland, DC, Virginia, West Virginia, and the ones listed there, you are taxed normally in the state that you live in. So if you live in Maryland, but you work in DC, you would be filing a Maryland tax return because that's the state that you live in. So you actually wouldn't have a tax liability or tax return due in the state where you're working if you live in one of the states where they have an agreement. So the general rule for these states is that you pay taxes in the state where you're living and the state where you're a resident. So if you have had taxes withheld from the state where you're not, where you shouldn't be filing, you can file a tax return to get that money refunded, but you would also have to make sure to file the tax return in the state where you live.
And usually there are forms that you can file with your employer to say that you're actually living in, let's say, Virginia. So therefore you should have exemption from having, let's say you work in DC, exemption from having DC taxes refunded. So you can do that as well to make sure they don't unnecessarily withhold taxes. Any more questions? Yep.
Do the same exemptions from your previous slide apply to the state tax residency?
No, so those days that you don't count for your substantial presence don't apply for determining state residence.
Does that mean I can be technically a non-resident on the federal level or a resident?
Correct.
Correct.
Okay.
Resident or partial resident, whatever the situation is. Social Security and Medicare. So students holding the F visa are exempt from having to pay into Social Security and Medicare taxes, generally for the first 5 years. So if your employer, improperly withheld these taxes, you can file those forms that we've listed up there with the IRS to get those refunds back. Yep.
So for the F visa, if my previous F visa was sponsored by my high school and now my F visa is sponsored by Georgetown, so is that 5-year accumulated or it's gonna be a new 5-year?
So you look at the 5 years as you are a student. So it's all accumulated.
It doesn't matter like who sponsored my F visa, right?
No, it's looking at you as a student, when you were a student for the past 5 years. So again, you can look beyond the 5 years to see if it's going to exempt you. As long as you can prove, if you go onto the actual website to look at the details, it's got all the exemptions that may apply to you. So if you fall into one of those and you can really prove that you're not here to stay permanently, you can potentially exempt days beyond the 5 years. Yep?
A side question, will you share us the slides afterwards? This is useful. These guys we taking pictures.
I
If
think
you
we,
can, if it,
Yeah.
I can post it on the tax website of the Office of Global Services.
And you guys a sign-in sheet going around for email address?
I'm not going to email it to the list. I would just put it up on the OGS tax website. So if you look at there, I'd say in a week or so, I'll have that information up there.
Okay. So this is to do with if you're a U.S. citizen, how do you make a determination whether you file a return or not? So basically, as we mentioned before, there's thresholds, filing thresholds. So usually if you have gross income in excess of $10,350 and you're under the age of 65 and you're filing as a single, it probably will trigger a filing requirement for federal purposes. Now, if you're going to be filing as married filing joint, if your income exceeds $20,700 US, it'll most likely trigger a filing requirement. So again, this is for federal purposes. As we mentioned before, states have their own rules, so you have to look at each of the states to see what their filing thresholds are. So if you're a citizen, you would typically file 1040, or you can potentially file 1040EZ. If you know that you're going to be using a filing status of single or married filing joint, and you're not going to be claiming any dependents, And also, if your income is below $100,000, you can use the 1040 easy. And if you know you have no adjustments to make to your gross income, again, you can use that form. Otherwise, you would typically use a Form 1040. And I think they will cover this at the domestic session on Monday in more detail. If you are a citizen or resident, as Kyle mentioned before, you can claim deductions. You can either claim standard deductions or you can claim something called itemized deductions. So that you would report on the form called Schedule A. So generally you can take the higher of either itemized deductions or standard deductions. And again, in terms of itemized deductions, there's a whole host of things that you can itemize deductions for. So let's say you're paying state taxes. Let's say you're paying any kind of property taxes. If you own a home, and you're paying mortgage interest or property taxes, things like that will count towards your itemized deductions. Some of the other forms that may apply to you as students or trainees is if you're going to be claiming tuition and fee deductions, then 8917 is the form that you would be filing to claim those deductions. If you're claiming any sort of like lifetime learning credits or the American Opportunity credits, there are separate forms. So 8863 is the form you would use to claim lifetime learning credits. And then if you're claiming any kind of unreimbursed business expenses, you would use Form 2106. So those are the forms. I mean, depending on your situation, there may be additional forms, depending on what you've had in terms of, income and deductions during the year. So these are just a few of the forms that we've listed.
And as Radha said, so those are the forms if you're filing as a resident taxpayer. But if you are a non-resident, so if you're classified as a non-resident based under, having an F1 visa and a student and you don't meet that substantial presence test, you're not required to file the Form 1040-NR if your income for the year, so the calendar year, is less than $4,050. You only have interest income from U.S. banks or savings institutions. Your scholarships are totally tax-free. In those cases, you do not need to file the Form 1040-NR. However, if you have income over that threshold, or you have taxable scholarships, or you have other income, then you would need to file the Form 1040-NR. So if you're not required to file Form 1040-NR, you still do need to file a form. It's Form 8843. And this form is where you would report, and I'll go over it in more detail later, but you report the days that you spent in the U.S., your visa type, and a few other details. And then if you do have less than the $4,050 of income, but say there was withholding, your employer withheld taxes from that, you could still file a tax return in order to have that withholding refunded. So although you may not be required to file a tax return, you may want to file your tax return in order to get that withholding back. And another point is when you file the Form 1040-NR, you still have to complete Form 8843, and then you just include that with the 1040-NR when you mail those together. So this is just the Form 1040-NR, the first page. There's 5 pages. But you can see line 8 is wages, so that's normally where you would report your income that you've earned. And then there's also sections, I think line 22 is if you have income that is able to be exempted from a treaty. So this, if you're filing as a non-resident, this is the form, at least the full-length form that you would expect to see. There's also a Form 1040-NR-EZ, which is a simplified version.
Right. Yep.
Quick question, what counts as an income? Does, for example, savings that I have from abroad count as an income, or it has to be an income from a U.S. account?
So if you're a non-resident and you have savings coming from foreign accounts, that's not going to be taxable income to a non-resident.
That's if you're a non-resident. But if you are a resident and you have income that's being generated from foreign sources, that would still be reportable on a resident U.S.
And also for non-residents, even if you have U.S. bank interest, that's also something that's exempt from U.S. taxes. So as I mentioned before, there's Form 8843, statement for exempt individuals and individuals with a medical condition. So this form, if you are under the F1 or J1 visa, it must be filed no matter what, even if you do not have income and you're considered a non-resident.
I'm going to pull up the form on this slide so you can kind of have a look at it as kind of talks about it.
And all students, and if you have a spouse, they all must file this form. And I think on the OGS website, there's more details on certain aspects that you need to fill out on the form. There's a section that asks for the Director of the Academic Program, and so that's listed on that website. And also on that website, there's a 2-page handout that covers a lot of the things that we went over as well. So that has more details on exactly what you need to include on this form. So if you do not have income and you don't need to file the Form 1040-NR, you should file this Form 8843. You'll sign on the second page and fill out the section that applies to you. So if you're a student, you would fill out Part 1 and Part 3, and then you would sign. And this form must be mailed by June 15th to the tax authorities. And if you are filing a 1040-NR, you would just fill out this form. You wouldn't sign this form because you're signing the actual tax return, but you would just attach this completed form with your tax return when you submit that prior to the April 15th deadline.
Yep.
I have some questions regarding this form. I came here in July on J1 visa as a research scholar. Which part of this form should I complete? Is it part 2 or part 3?
So you came in as a trainee or as a student?
Research scholar.
I think all the J categories except for the student fall under teacher and trainee, even though the name doesn't kind of correlate, but the research scholar I think falls on the teacher it's a non-student.
Right.
And for the first line in the form, for the year January,
Sorry, the form's kind of small.
yes, at the line beginning, I couldn't in this form. I didn't know what should I put in this space.
Oh, beginning.
For which?
Oh, it's at the very top.
Yeah, it's the first line.
Beginning. No, you don't need to complete anything up there.
Because this
So,
is for the 2016
right, so that
tax year,
says
so
for
you
the
don't
tax
need to-
year 2016, or if for whatever reason you have a different tax year, but you don't need to complete anything in that very top section where it says beginning blank and ending. Section blank.
And one more question, please. In part 1, enter the number of days in 2016 you claim you can exclude the purposes of the substantial business test. I came here in July, so what number should I put in this place?
So you count the number of days that you have from July till December 31st in 2016, and that's pretty much it. Yep. Yep.
A question. In the 1040 form, when we have to like fill the wage, the wage should we fill like what we actually get from Georgetown, so after tax deduction, or what we get before tax deduction?
So it's the amount before deduction, so you should get the form W-2, the amount of box 1, that's what you'll pick up. So there are some pre-tax deductions that you get, so if you have such as 401k plans or medical plans that can be considered pre-tax deductions, those will be already considered in that box 1 of your form W-2. So that's the number that you should pick up from the W-2.
Okay, thank you.
When does someone have to complete 1040 NR easy?
Sorry, 1040
The easy form.
easy form. You can complete that provided you meet certain conditions. So you typically file 1040 easy if you're either claiming a single, like filing status of single, or married filing joint, and if your income is below $100,000.
What would be the difference between the easy and 1040 NR?
1040 NR is like a non-resident return. 1040 EZ and 1040 are resident tax returns. So they're completely different in the terms of what gets taxed and what gets reported. So under 1040 NR, you're a non-resident, so any income outside of the U.S. typically would not be reported on that form. It's not going to be taxable on that form. Whereas under a 1040, you're going to be filing as a resident, which means you report your worldwide income. So income from any sources, whether it be compensation, interest, dividend, capital gains, anything like that.
And the normal difference between a regular form and the Form EZ is just the EZ is more simplified. So if you have less deductions, or basically you can't file an EZ form if you have certain income items or deductions, but though they get you to the same place.
Yep.
I have a question about the U.S. source income. Is the only requirement is that it should be earned physically in the U.S.? Because what if it was an internship? It was a U.S. entity, but the project was not in the U.S. It was in Africa. Would that fall under the income effectively collected with a U.S. paper business?
So you worked for a U.S. company, but they sent you to a foreign location?
The project was there.
So as long as you're still considered a non-resident, that income wouldn't be considered.
Right. Are you getting a W-2 for that? Are you getting any kind of statement?
No.
Nothing is reported there?
No.
Yeah, typically, I mean, it would be considered foreign source because your work days that you incurred to earn that was overseas.
Okay.
Right. Yep.
So I just want to clarify. So if you're on an F1 status and you've been in the US for less than 5 years, say, like less than even 2 years, then you need to file the 1040 NR, correct?
Do you have income?
Yes.
Yes. And you're over that threshold of income, then you file the Form 1040 NR.
And then you have to file the 8843 as
With
well.
it.
Yep.
Is there any reason not to file NR easy instead of
I think, I'm not sure if there's any, there may be certain deductions or things that you can claim on the 1040 NR that may not be available there. But I don't know of any specific reason not to do one or the other.
Yep, at the back.
I couldn't hear your answer to the question and the number of days in 2016 when you can exclude the substantial presence test if you could just...
You want us to go through the substantial presence test again?
So
She's asking about the...
So you list the amount of days in the 2016 calendar year that you were physically present in the U.S. So you count up how many days you spent in the U.S. during the year, and that includes any partial day in the U.S. So if you came, on the 5th, and if you came January 5th, that counts as one full day for the test. So you would just count any days that you spent in the U.S. in that year, and you would include that there.
So it's basically the same number of the actual number of days spent in the US.
Right.
Right. So when we talk about days, it includes days that you were here for personal reasons, for work reasons, anything like that. Okay?
For A and for B can be the same answer.
Sorry, we couldn't hear you.
For A and for B can be the same answer.
Yes.
Yes. Yes. Lots of questions. Okay, I think you were here, down here, yeah?
So, if I haven't worked here for more than 5 years and I made money last year, and I got taxed, can I get it back? Can I file my tax return?
You mean you had tax withholding on it? Is that what you're saying?
So when I now the W-2 or whatever, so the government will count me
right
on my income. So can I? Since I don't get Social Security benefit and all that stuff, then is that
you get the refunds back?
Yeah.
So it's all going to depend on what your income is?
Well,
So
it's not more than whatever you pay. Or is it more than
So you could file, as long as it's within 3 years, you could file a tax return still, and have that income, that withholding refunded. Yeah, within 3 years is from the due date of the return, for filing a return, to claim a refund.
So if you feel that, prior years, so prior to 2016, you had income and taxes incorrectly withheld, the statute is you can go for 3 years.
But if you owe tax in the year, there is no statute. So if there was a year where you didn't file and you had a balance due, you need to file, those taxes will always be due and you should always file for them.
Even if my country doesn't have the tax treaty?
Right, but if you're earning the income here in the U.S. from U.S. sources, and that income is taxable, considered taxable income, you may have a filing requirement. But again, it depends on your threshold. So if you had taxes withheld, maybe when you shouldn't have, Or employer may be withholding taxes.
I
You
don't
may,
know, like, if I was supposed to, I mean, like, that's my first time working.
right,
So I've
right.
never worked before, and,
So they may have had the obligation to withhold because they're paying you income. But if you file a return, and let's say, you know, you're able to claim an exemption for yourself, you're able to claim standard deduction, at the end of the day, you may have very little income that's considered taxable. So then, when you apply the tax tables against it, there may be no liability. If that's the case, any taxes you had withheld, you should be able to get that back. Right? Yeah, maybe let's finish it and then we can kind of talk about it towards the end.
Next slide. No.
So, some general things to watch out in terms of tax filing and deadlines. So typically, as we mentioned before, the US tax year runs from January 1st till December 31st, and tax returns are due by April 15th following the end of the calendar year. This year, the filing deadline is actually April 18th because of, I think there's an emancipation holiday in DC on the day, I think on a Monday, so it was moved to the 18th, and 15th happens to fall on a weekend. So something you need to keep in mind, so if you're going to have income that's subject to tax, and let's say there's a potential payment due as of April 18th when you file the returns, there's going to be interest and penalties that's going to accrue in the event that you don't file and pay your balance due by that date. So there is an extension available in the US for federal purposes. So states have, some states have a separate extension form, some states don't, some states follow the federal. So we're going to be talking to you from a federal perspective. So from a federal perspective, there is a 6-month extension available, but that is an extension to file your tax return, not necessarily to pay the balances due. So which is why I want to very clearly emphasize that if there is a balance due, you think, as at April 18th, and you don't make that payment, it will accrue some interest and penalties, right? So that's one of the key deadlines. And then in terms of free filing, there's various software that's available out there. Usually the returns can be prepared for electronic filing, so that's what the e-filing option is. It's a lot easier than paper filing. However, it depends on the tax return that you're filing. So historically, if you're filing as a 1040 NR, the electronic filing is not available. So again, that's something to keep in mind. So I think in terms of the free filing, if your adjusted gross income is below 64,000, I think you can file for free. So again, I think you can go to the website. I think the OGC website has the software. I think you guys still use the Glacier tax preparation software, so you can use that to file your returns. And I think there's an additional fee for the state filing, correct?
Right, so OGS provides access to Glacier Tax Prep if you're a non-resident for free. We purchased a license for that. You just need to request an access code to get into the system. Even if you used it last year, you still need to request an access code for this year. SprintTax is something you can use to do your state return if you like, but that's not sponsored by the office. So there's a fee, I think, of about $29 if you wanted to do that with SprintTax. Okay.
Alternatively, you can also print off the tax forms that's available through the IRS website to prepare your returns. Can we kind of take questions towards the end so that we go through the presentation and then we can kind of ask all the questions? So in terms of where you file your return, it all depends on, firstly, whether if there is a payment due, and secondly, what state you're living in. So the IRS clearly has website, the addresses listed, so you may want to check the website to see where you would send in your tax return. Unfortunately, there's no one address at the IRS where you send in the return, so depending on the state and depending on whether there's a payment due or a refund, there's different mailing addresses. So again, if you go onto the IRS website, it should list it out for you. In terms of identification number, we kind of briefly about this when we looked at the agenda. So if you're working in the US, you would be required to have a social security number. And typically this is applied for through the form SS5 that we've listed up there. So you would need to take that form along with the proof of your identification as well as your work visa to show that you are truly working here in the US and that's the reason you're requesting a social security number. And this form is free, this application is free. So once you get your social security number, you can use that for work purposes. and you would use that for reporting on your tax returns. Now, for some reason, if you're not eligible to receive a social security number, but you need to file tax returns, you can get something called the ITIN, so ITIN, so it's Individual Taxpayer Identification Number. And you pretty much use that for tax preparation purposes only. You don't use that for employment purposes. And you would usually file Form W7 to obtain that ITIN number. And there's usually, depending on what your status is, you have to provide details of your identification again. So passports, birth certificates, things like that, that verify your identity. Now the IRS has become very kind of tight around issuing the ITINs. So there's a lot more scrutiny about even receiving the ITINs, and there's very kind of strict measures. So usually if you're filing a return, the W7 form would be attached to that return. And there's like a very, very short turnaround time between filing that form and getting all your documents certified to be able to get this number. Okay? So again, I think the OGS can certify the letter for you, so please contact the OGS for the details. Sources of income. I know some of you had questions. How do you determine whether it's U.S. source versus foreign source? So typically, if it's for services performed here in the U.S., it would be considered U.S. source. If it's for services performed outside of the U.S., it will be considered foreign source. Now, again, there's treaty that comes into play. So, depending on what your situation is, and if there's an income tax treaty between the country that you're from and the U.S., you can look to the treaty to see if you can potentially exempt some of the income from being reported on the U.S. returns. Taxable versus non-taxable scholarship and fellowship. So the next slide I want to bring up has a grid in terms of what you would consider taxable versus non-taxable. And also, it's going to depend on whether you're a degree student versus not. But basically, if you're using the scholarship funds to pay tuition fees and course-related expenses, then typically those would not be considered taxable. And again, there are treaty exemptions that could apply to non-residents. So again, you have to look at the specific country that you're from. There's treaty articles that relate to students and teachers. And you look at the wording within that treaty to see if you can potentially exempt that income from being taxed in the U.S. Okay, so if there's any income that you earn and for some reason it's not reported on your W-2 form, which is, W-2 is basically the U.S. equivalent of annual wage statement. So for example, if I'm employed with PwC, they would issue a W-2 form for me to report the wages that I earned during that calendar year that I'm looking at. So if you earned income and that's not reported on a W-2 and it's considered taxable, then on your tax return, you would report it and you would, so let's say it's from scholarship. You would enter the letters SCH, which just means taxable scholarship. Interest, dividends, capital gains, again, those are reported on the form 1099 or 1042S, right, depending on what the income is. So again, you have to look at whether it's coming from a U.S. payer versus a foreign payer to determine whether it's going to be subject to tax in the U.S. return. And again, as Kyle mentioned before, it's all going to depend on how you file your U.S. return, whether it's a non-resident versus a resident. Because again, if you're going to be filing as a non-resident, if you're going to be receiving interest income, dividend income from, let's say, I don't know, UK or India or somewhere like that, that could not be reported on your 1040 NR return. And again, if some of these income items are going to be subject to tax in the US, you can always look to the income tax treaty from the country that you're from and the US to see if there's any kind of special rates that may apply. Firstly, there has to be a treaty article that references that income that you're talking about, and sometimes the treaty may allow for that income to be taxed at a lower rate. Okay? So the next slide, so this is the slide I was talking about. So in terms of scholarship and fellowship payments, I think that's actually, it looks better on that screen than it does here. So again, depending on whether you're a degree candidate versus not, the items that you're going to be using that fellowship and scholarship payments for can be either considered tax-free or taxable. So usually if you're a degree candidate, anything you're using to pay towards your tuition fees and books and supplies and equipment are usually considered tax-free. But anything that you use towards paying for your room, board, and travel would be considered taxable regardless of whether you are a degree candidate versus not. So that table is going to be useful. You can always get this from the IRS website as well. So I think you'll be sharing the slides, so you can have a look at this on the slides as well. In terms of what a W-2 looks like, if you've never received one, this is what it looks like. So box 1 up there is where you're going to be reporting or your employer reports what they consider your taxable income to be. So if you had any pre-tax deductions like 401k or medical or anything like that that you paid, all of those will be deducted and the net amount will be reported on in box 1. Now if you had taxes withheld, it'll go into box 2. If you are subject to Social Security and Medicare taxes, the actual Social Security and Medicare taxes withheld would be reported in box 4 and 6. Now, for the wages that are considered taxable for Social Security and Medicare can be different to the wages that's reported in box 1. The reason being, for example, if you're having 401k contributions being made, those are not exempt for Social Security and Medicare taxes. So just to make up numbers here, let's say you had income of $100,000. And let's say $15,000 of those were related to 401k contributions that you personally made, and the $100,000 already has that deducted. So in box 1, you would see $100,000, but in box 3 and 5, you would actually see $115,000. Because 401k, for example, is not exempt from Social Security and Medicare.
So if you meet the criteria we listed earlier, so if you're an F1 student, you're less than 5 years, and you're not subject to Medicare, Social Security withholding, if you see amounts in box 4 and box 6, that's how you would know that you can potentially get this refunded when you file your return because you're not subject to pay those taxes in those years.
Right, and I think we have listed a couple of forms on an earlier slide that you would file to get those refunds back. And then if you have state filing down here, it's going to report the wages that's applicable for state purposes, and it'll also have the state withholding. In most cases, if you're just working in that one state and everything is going to be considered taxable for that state, then the amount of wages that you would see in box 16 would be the same as what you would see in box 1. Okay? This is the wonderful 1042S form that I think Georgetown will be issuing around March timeframe, correct? So this is where, basically this is issued to any foreign person who had U.S. source income subject to withholding. So again, any scholarship funds you may be receiving, anything like that would get reported on this. And depending on whether it's exempt or it's taxable, you would have certain codes listed up there, in the box 3 and 4. And then if they had any withholding, you would see the withholding taxes, and the rate would be listed up there. So if you had federal taxes withheld, you would see it in box 7. If there was any other taxes, depending on what income that you're receiving, and it was withheld by that agent, you would see the taxes being reported in box 8 and 9. And then some of this detail is basically, just getting the address, identification numbers, and things like that. So again, down the bottom, you have state tax as well. So if there were state taxes that were withheld, it would be reported on this form. Yep?
You talked about scholarship, tax treatment for scholarship payments and stuff like that. But for general tuition payments, is there an opportunity for someone to report that on a tax document? For them to see that?
So you make tuition, you personally may pay tuition? Is that what you're talking about?
Right.
Right. So that would be on a different form. It's usually on a 1098 form, 1098T.
Yeah, you would be issued a 1098T showing the tuition that you paid. However, on
separate from filing the 1040 and all that.
Right, so on a 1040 and there's no deduction that you can claim for paying tuition. If you're a resident, there is a form that you can file to claim as a deduction on your return potentially. But you wouldn't have to file anything related to tuition.
Yeah, tuition payments that you make, you can claim as a deduction on the return. So this form itself is reporting any income that you're receiving, right? Okay.
So, and once again, this is just another slide for residents. As I said, you can file jointly, and there's different standard deductions. So if you become a resident after 5 years, if your income is more than the total of the standard deduction and the personal exemption, then you would have a tax liability due. Also, as a resident, you have more itemized deductions available to you than as a non-resident. So they're listed up there. So like Radha mentioned earlier, mortgage interest, property taxes, items like that. And then you're also available to take deductions for things like student loan interest that you pay, tuition and fees, and there's also certain other credits related to education costs that you may be able to take as a resident. So, but as a non-resident, the itemized deductions that you can normally claim are limited. It's normally just your state and local income taxes that you've paid, as well as contributions to U.S. charities, as well as a few other miscellaneous business deductions. So the purpose of the itemized deductions are that it reduces your overall taxable income. So if you had $10,000 of wages, but you paid certain state taxes, say of $2,000, then your taxable income would get reduced by that $2,000. So it would just be $8,000 of taxable income. So that's the benefit of the itemized deductions. Also, for non-residents, you are still allowed a deduction for student loan interest. So you would normally get a form, which we'll go over. I think it should be a 1098E reporting your student loan interest that you've paid during the year. And on that 1040 NR, there's a line where you can report that, and that also reduces your taxable income. Also, for non-residents, if you have U.S. source income that you earn, it's normally taxed at a flat 30% rate. But as Radha mentioned, if there's a treaty that applies, there's a potential for it to be taxed at a lower rate and to be withheld at a lower rate. It really depends on which country you're from and what are the rates listed in the treaty.
And whether there is an income tax treaty. Not all countries have income tax treaties that are enforced with the United States.
Yes.
Medical costs in addition to your health insurance, you can deduct that.
So, I don't think for non-residents, and even for residents, medical costs are normally limited so that they have to be above a certain threshold related to how much income you make. So most times you don't receive the benefit of paying those additional medical costs. But usually when you fill out it's called Schedule A, where you report your itemized deductions, it will ask you for that information if you're able to claim them.
So typically, just to give you an example, any medical expenses that were not reimbursed by insurance, if it exceeds 10% of your adjusted gross income, then that's what, anything above that limit is what you would be able to take as a deduction. So generally, unless you have excessive medical bills, which are not reimbursed, and your income is low, you're not going to be able to claim any kind of benefits. Okay.
So as I said before, so student loan interest deduction can be claimed by U.S. residents or non-residents. It's limited to your first $2,500 of student loan interest. And based on the income levels there, if you make over a certain amount, depending on if you file single or married filing jointly, the benefit of this may be phased out, so you're no longer able to claim that deduction if you make over a certain amount. So if you're single and you make more than $80,000, you can no longer claim the deduction for paying student loan interest. And as I said, you should receive a Form 1098E reporting the amount of student loan interest that you've paid in the year.
So we have just a couple more slides left. So in terms of treaties, so most treaties give some sort of special consideration for foreign students and scholars. So again, firstly, you have to determine if there is an income tax treaty between the country you're from and the United States. And usually there are separate articles for students versus teachers. So you would reference those treaty articles to see if any of these exemptions will apply. So if the exemption applies, then it's usually exemption. When we talk about exemption, we're talking about how we can potentially reduce the income that's being subject to tax in the U.S. right on your income items. If the exemption applies, then you would usually report it on page 5 of your Form 1040-NR, which is a non-resident return. And then Form 8833 is just a treaty claim form. So if you're going to claim an exemption from the treaty, you have to indicate what article from the treaty and what country's treaty that you're referencing to be able to claim that exemption. So that's what the Form 8833 is referencing. And then the exemption guidelines are actually published in the publication 901. There's actually a very good table. I had a quick look at this. It actually lists the specific countries and the different types of items and what treaty article you can reference. And it's basically, it gives you a time limitation as well as dollar amounts. So for example, it may say, if you're here in the US as a student, let's pick an article, maybe UK treaty. And if you were here for 2 years or less, and if you had income below a certain threshold, then you can potentially use the treaty article that relates to students or teachers from that treaty to exempt your income on your Form 1040. And again, just because there is an income tax treaty doesn't mean that you can claim a treaty benefit. Again, it's all going to depend on how you're going to be filing in the U.S. So I think when we covered before, if you're going to be treated as a resident, then a lot of the treaty exemptions may not apply. If you file as a non-resident, then you can potentially look to the treaty. It's also going to look at your facts and circumstances. It's not just income, it's not just compensation pieces that we're looking at. We're also looking at other items like, interest, dividends, and things like that. And there are certain rules around that. So, it depends on whether it's a foreign payer that's paying you the income versus a U.S. payer in terms of how it can be treated for tax purposes. And also the treaty article has to have something about the income item that you're looking at. So if there's no treaty article that references, let's say, interest or dividend income, then you can't really use the treaty to claim any sort of exemptions. And again, there's a time and amount, and you can look to that publication 901 that's going to give you details. The last slide here is just giving you details of some publications that you can look at. So 901 is definitely one of them. There's also some other ones like publication 17, it's talking about your federal income tax. Publication 519 is looking at the guide for aliens. Sorry, I know the IRS refers to anyone that's not a U.S. citizen or a green card holder as an alien. So just a couple of different treaty articles up there. Okay, now we're open to questions. So, yep.
Just to make sure I understood correctly, if you're a non-resident with an F visa, gonna be here for a couple of years,
right.
But after you graduate, and let's say you get a job, you're gonna be with the H-1 visa. You will not be considered a resident up to 5 years afterwards.
If you switch visas, then you'll be once you're working under that H-1 visa, you'll be taxable.
So you'll be considered a resident in the first year when you have the H-1 visa.
I think so. I think those days are no longer exempt from the substantial presence test. So you need to look at if you still meet the substantial presence test based on.
Let's say you start working for the whole year in the U.S. with the H-1 visa. That first year you're a resident.
Yes.
Right. Yep. Sorry, I'll come back to you.
If I arrive in the United States in fall 2012, does it get to be called counted?
Yeah, you're looking at 2012 as one question, correct?
Okay, and like if I start as a J1, does one J1 like towards the 5 years?
Were you a student during the whole time? Yeah, so you have to look at Yep. Sorry, there was a question back there.
I'm a J2.
Okay.
My J1
Are you working? What are you doing?
So I have to file the 10-year.
Okay.
But the non-resident because of the 2-year exemption. But I don't get the exemption. So I have to pay Medicare.
You are subject to Medicare?
Yeah, so just because your spouse is a non-resident, you can still be a resident.
But am I a resident? Because it's not the same thing. Like, because J2s have to pay for Medicare, but is that just separate from the fact whether I'm a resident or a non-resident? Like, is that just an extra
No,
J2?
so if it's after 2 years,
It's not after 2 years, but I still have to pay Medicare.
oh, because you're not on J1, you're on J2.
I'm J2, so J2s are subject to Medicare. Oh, I hope so, because I'm paying. So.
You may have to look at the website because we don't know about all the different visa statuses.
Yeah, I would look and see if J2 is exempt from substantial presence test. I think it's just J1.
But it's not automatic that if he's a non-resident, I'm
No.
non-resident?
Right.
No,
Okay.
it's not automatic, no.
And I have another question to do with the Medicaid. They didn't take enough.
Okay.
So I underpaid.
How do you know that? I'm just curious to know, how do you know that?
I calculated.
Oh, you calculated, okay.
Yeah. So I definitely underpaid.
Okay.
How do I pay more? Like, how do I pay them back? Or what do to fix that?
Do you have your W-2?
Yeah.
So for Medicare,
Yeah, it's wrong on the W-2, like, everything's wrong.
Normally, I don't know if there's a way to correct the Medicare after the fact. It's not something that normally is going to get picked up on your tax return. It's because the Medicare doesn't flow to your tax return anywhere.
Yeah.
So,
But it is wrong and I should pay the rest.
You should probably talk to your employer.
Yeah. What if they're useless? Because they've done the wrong thing, but I've done the wrong thing with them. So if I don't pay it back in time, then I would get paid, charged more, right?
I can't say for sure, but in that case, I don't think anything would come up because normally it's your employer reporting the Medicare. You don't normally pay Medicare or Social Security outside of the W-2 form, so.
Right, nothing gets, so even though you get a W-2 and there's Social Security and Medicare reported on it, when you file your tax return, those amounts are not actually flowing through. So you don't necessarily pay extra in terms of Medicare or Social Security. None of those are actually calculated with the return. So it would have to be something that you have to take up with your employer. The IRS will get a copy of the W-2.
Yeah.
So maybe at that stage I don't know, they may pick it up. We're not sure.
Okay.
We're not sure. I think we had a question here and then I'll come back to you guys.
Yeah, I just have two very simple questions. One is, so I worked at Georgetown, I worked in Maryland. Do I have to file state tax returns or, like, I know that there's this separate software that we have to use. So is it necessary for us to do that? Is it not?
So which state did you live in?
Like DC, I live on campus.
So if you live in DC, you would need to file a DC tax return if your income is above the DC threshold.
Which is about...
I might have it written.
Because every state has.
I think it's over about $4,100, so if it's over that much, you would normally need to file the DC tax return.
Okay. Second question is, I have like capital gains income, so do I file an employee tax prep? Is there like a way for me to type in like 1099 form information?
Yes, there should be that in English.
Yep. Back there.
If you're considered a resident under the substantial presence test, would you still have to file if you make under 10,000?
So if you're a resident and you make under the personal exemption and the standard deduction amount, you normally don't need to file then.
So even if you're not an actual resident, if you're considered a resident, then that threshold holds for you?
It will hold for you. And so the reason you may want to file is if you have wages reported and they withheld from them.
Yeah.
When you file your return, if say you made $8,000, you would then get the standard deduction and personal exemption of $10,000. So that would reduce your taxable income to zero, and then you would be able to get your withholding refunded.
Yep. I think yourself? Yep.
Just two really quick questions. The one thing I didn't understand was, so last year, for the full year, I was an F1 student, and made an income, but like even less than $1,000 by the end of it, do I need to file the 1040 NR and my state tax, or no?
So if you're under that personal exemption amount of $4,000, last year was 4,000, or in 2016?
Yeah, this 40.
Yeah, so if it's less than $4,050, you don't need to file the 1040 NR, but you would need to file the 8843.
And the state tax.
If it's only $1,000, you wouldn't, that's below all of the state thresholds, so you wouldn't.
Did you have any income withheld?
Pardon me?
Did you have any taxes withheld?
Yes.
So you could file to get the withholding
Yeah,
back?
you may want to get the
But-
withholding amount.
File it if you wanted that money back.
Right, but
Exactly.
if you don't need to file if you're below, so I would just look up your state threshold, but Maryland, all of them are more than $1,000
Yeah,
states here.
I was in DC. And then, second, do you know, like, in your opinion, is it useful to use something like a TurboTax for this, and is that possible as an international?
So you can use the Glacier tax prep that Georgetown has, if you're a student, that's free.
Okay.
On the website, there's like a questionnaire, and then it directs you to what forms you need to do, and and they'll give you a code, right?
Yeah.
Oh, okay.
Can I ask a question related to that? Last year especially, I got a lot of questions. Well, I filed a resident tax return already, and I got a lot of money back. When it turns out they're a non-resident. Is there a penalty for filing a resident tax return when you're a non-resident? And getting maybe money back that you shouldn't have as a non-resident?
So.
Is it just if the IRS audits you? And
Yeah, so I mean, if the IRS comes, they're usually not auditing, I would think, which.
Right, they're not necessarily going to know.
But-
But I think what may happen is, like, let's say they filed a resident return last year, and then all of a sudden they go back to filing non-resident return. And if there's inconsistencies, then the IRS could come back and question what's going on, what happened. So, yep. I think we have questions back there?
I just have two questions.
Yeah.
First of all, my W-2 form, I was here from the 28th of November last year. I had one paycheck. My W-2 form has nothing on it.
Okay.
Is that correct? It's got no salary noted.
It may have been because the income was very low. It could also be because your employer didn't do it properly. There could be multiple reasons. for
Yeah,
it.
I would check with your employer
Yeah,
to
check
see
with
why
your employer.
there's, so if you worked here during the year and they give you a
Yes,
paycheck during the
On
year,
the 31st of December.
yes, so I would think that they would have reported wages.
Yeah,
Right.
I would assume
that
so.
looks too wrong.
It could be, unless you have the treaty that says your first $5,000 are exempt.
I'm from the UK, there is a tax treaty in effect, so I don't pay any tax, I don't think, while I'm here, because I will pay full tax when I go back to the UK.
Right.
But I think they would still,
Maybe she'd be issued a 1042S to report the income.
Right,
Is it from
you-
Georgetown?
Yeah.
She might get
Did-
if it's tax treaty benefits, then it's going to be issued another.
Yeah.
right, so did you submit a form when you started work to say that the treaty applied to you?
Yes, it is.
So then you'll probably get a 1042S if it was below that, if you're not doing any income tax on that, if it's not taxable.
And that will come mid-March.
Yeah, I think mid-March, yeah.
Okay, brilliant.
Yep.
And my second question, it's actually in relation to this year now, filing for this year, next year. What was the business about, sort of, if you're J1 and residency, because I'll be here for more than 183 days, but does that mean that I'm
But your J1
that I'm
status.
J1?
Right.
And it's the first 2 years of being here, so then you'll still be exempt for purposes of the substantial presence test.
So I'd still be a non-resident.
Right.
Brilliant. That's
Yep.
I've suddenly got very freaked out.
Back there?
Yeah, me.
Yeah.
I just have two questions. The first is, how can you determine what withholdings are refundable, or is that determined by the IRS once you file your tax?
Once you file your tax return, because there are tax tables that apply, once you report your taxable income, you claim exemptions, deductions, you come up with a taxable amount, then there are tax tables, right?
So when you complete the form or you use the tax software, it will show you on the second page of the return normally, it will show you either the balance due or the refund. It will compare your taxes due with your withholding to show if you have a refund or a balance due.
And that's basically calculated through the tax tables, right?
Because I know for a fact that I did not claim at least one withholding allowance that I had, so they've been withholding sort of in excess,
Right.
I do get a refund for that, right?
You will.
As long as you have more withholding than your tax rate, which should be the case.
My second question was, if you have, you have dividends from somewhere else, in the States, do you need to report that, and in what other forms would you have to report that?
So you have tax dividends from the US?
Not tax dividends, but dividends from investments.
If you have US source dividend, depending on the country, so usually if you're a non-resident, on page 4, you report your dividend income, and then depending on if there's a treaty or not, you report the rate that it's being taxed at. So the standard rate is 30% for investment income, but if you're from a country where it's less, you would report, say, 10% or 15%, but you would include that on the 1040 NR on that page 4, that dividend income, and then it will calculate the tax due on that, if there is tax due.
What if you have investments that reported losses? Would that give you any exemption or refund?
If you have capital losses, I don't,
No.
for residents, I know that capital losses, up to $3,000 of
Right.
loss, if it's realized loss you can take. For non-residents, I don't think you can, but I would check on the IRS site to be sure.
Okay, thank you.
Yep. I think down here.
Okay, looks like everyone has two questions. First one relates to did internship in New York, taxed in New York State, I live in Virginia.
Right.
Firstly, do I need to sign, make 2 state returns? And given that none was withheld for Virginia, how am I affected? I live most of my time in Virginia.
So then most likely you would be a Virginia resident and you were working in New York, so Virginia and New York don't have an agreement. So you would need to most likely file a New York non-resident return, and you'll report, your W-2 should show your New York source wages and withholding. So you would report that and file your New York return reporting those. And then your Virginia return also would have that wage withholding, the wages total, and then you're able to receive a credit for the taxes that you paid in New York to reduce your Virginia tax liability. So as long as your Virginia tax rate is not higher than your New York rate, you won't have to pay double tax, right?
All right, cool.
Most states allow for credits,
Okay.
for taxes paid to another state. You just have to check each of the state returns to see what states it applies to, whether there's a credit in place. But I think Virginia does allow it, so.
So I'll have to file 2 separate.
Two state returns,
Okay.
But you're not going to be taxed twice on the same income.
As long as there's no difference on.
Right, you'll most likely end up paying the higher rate, which I think
Yes,
will be New
New
York.
York.
Okay, got you.
Yep.
And the second question was regarding the student loan deduction.
Mhm.
Does that have to be U.S. loan in terms of, so the student loan that's funding, that is of course, but it says sourced from the UK. Does it have to be a U.S. financial, whatever, a U.S. loan?
Financial institution. That's a good question, actually.
I would think so.
Because 1098T is usually what's, I think, issued to show your.
Your student loan
Your
interest.
student loan interest deductions. And if the US is not the one that's, it's not from a US institution, I'm not sure they'll be even issuing you one.
Okay.
So again, you may have to look at the instructions to see that,
Okay.
to see the details behind that. Because what we have typically seen is from US sources.
Okay.
Yep. Back there and I'll come down here. Yep.
If you're outside of the country, I mean, if you go back, how do you do? How do you file the taxes and how do you get the refund?
Meaning you're leaving forever? Yeah. You're not coming back?
So when you file your return, the return you just need to mail into the US. I think this year you can do the 1040 NR online, although I'm not sure if Glacier, I think it said it supports it. Oh, it doesn't?
They don't want to e-file, they
They
don't trust the
don't want to do
IRS.
it. So you'll have to mail in the form to the tax authorities, and you should list on your tax return your address. So if there is a refund, they will mail you a check. However, those can only be deposited into.
Yeah, so there's a couple of options. So if you're here in the US, and let's say you're going to get a refund, you can either have the refund directly deposited into a US bank account, or you can have it issued to you as a check. But if you don't have a US bank account, so let's say when you go back,
You close your account.
you close your account, then the only option, the only way you can potentially get a refund back is through a check. And IRS will always use the mailing address that you listed on the most recent tax return that was filed. And you can always, so let's say when you file your return, you have a US address, but then at that time you didn't know you were going back.
Yeah.
Right? And then you change your mind and you end up going back. You can always call the IRS and let them know the most current mailing address to use. You can always change it later. Yep.
Question about the check, actually.
Oh, sorry?
The
what's that?
check, that would be a U.S. check, right? So could you deposit that in your own country, or how would you do that?
I think in the
You should
foreign
be able to.
countries, you
You
should
should
be
be
able to
able to.
still
Okay.
deposit.
But I
sure.
mean, again, with the foreign exchange rate, it may not be the same
Right.
amount.
Yeah.
Right? By the time you get it, it may be different.
Just want to make sure I'm absolutely clear on the J1 exemption. So when you talk about 2 years, so I arrived here in September last year, but the 2 years would be the 2016 tax return and the 2017 tax return, is that right? So
Right.
it's not kind of effectively 2 calendar years, it's just...
Right. Because US taxes run on a calendar year.
Yeah, sure, sure.
Right.
And my J2 dependent would have that same exemption. And then just one other question, if I changed during this year from a J visa to an H1B visa or whatever,
Uh-huh.
would I then automatically become a resident in terms of first filing my 2017 tax return?
So I think you would need to look at the substantial presence test then. So your H1 days would no longer be exempt.
Right.
So then the substantial present test would come in.
Right.
And then under the substantial presence test, if you still happen to be a non-resident, then fine, you may file a non-resident, but then going forward, if you know if you're going to be under the H1B visa, then you're going to be a resident.
You'll be a resident. Great, thank you.
Yep.
Is it possible to be taxed in both New York and DC on one source of income? Because I received 2 W-2s from the same employer last summer, for last summer's work, and wait, sorry, this is for 2015. So I ended up filing a tax return, a federal tax return and a DC tax return, but not a New York tax return because, I mean, I assumed that the DC one was the one that should have been correct, and I received 2 at different times. So I assumed that one was just incorrect, so it had been changed to DC.
But did you have withholding for New York?
So if you worked in New York,
Yeah.
you most likely should have filed a New York return
Okay.
to report the wages and withholding unless it was under the New York exemption amount.
Yeah.
And then if you had to pay tax in New York, you could claim a credit.
Yeah, it would definitely be a credit, but I just, okay, so should I call them to let them know that what happened, or what?
So you can file a New York return now for 2015 still.
Okay, but then I'll be fined.
If you have a balance.
If there's a balance due, so they should have withheld New York taxes, so on the W-2 it should say state wages, state withholding. So as long as the withholding is more than the tax due, there shouldn't be interest or penalties. But if there is a balance due, then they may assess interest and penalties based on the balance due.
Okay, so should I send in 2 different sets of state forms then, one for 2016 and one for 2015?
Right, so I would, yeah, the 2015 one would be separate than what you're filing in 2016.
2016 was the situation the same. Did you work in New York?
Yeah, the same job, but same summer internship. But the thing is, this time around, I didn't get taxed in the same way. I just got taxed in New York, state taxes.
Okay.
So that's why I was extra confused because I just didn't understand why I was taxed in a double, in 2 states.
So what it normally does is it sometimes will report your wages to both states because if you're a DC resident, although they're not withholding tax because you're not working in DC, they're still reporting that because you may still be a resident of DC for the year. So that income will be taxable in DC, but the withholding will be in New York, and it will also be reported in New York because that's where you're physically working. And then so you'd file both states, and then you would be able to claim a credit in one of the states, usually your resident state.
Thank you.
Yep. Yep. You.
Yeah. So I think through Glacier, they listed me as residents. So that means I either need to file the paper form papers and then mail them, or use the TurboTax, right?
Yeah, so if you're a resident, you can file online. I think if your income is under 66,000, there's free sites that will allow you to file your federal return. Or you could still do a paper return and mail that in. You have either option.
So can I use the TurboTax for the federal and then the paper mailing for the state?
You can do that, yeah. I think there's just certain numbers from your federal return that will need to flow through to your state return potentially. So it may be kind of tougher to do them separately, but it is possible not to do your state return when you file on TurboTax.
You just want to make sure the state numbers are correct, so.
So it's usually easier to do them on the same site.
So does the money come from parents which they're from outside the country? Is that